Good afternoon, everybody. This is going to be our Playbook episode 5. In this episode, we're going to discuss the VWAP trap setup. So this setup is fairly simple. The only thing you guys are going to need for this setup are, of course, the VWAPs. We like to use two VWAPs, the session VWAP, which starts at 6 p.m. Eastern the previous day, which is the session open for ES and NASDAQ, and the daily VWAP, which starts at 9:30 a.m. in the morning. That is the start of the New York cash session. The other thing you're going to need is delta. You're going to need a cumulative delta chart. Typically, we like to watch this on a 1 minute. And then on that 1 minute, we like to add a 1 hour average, an EMA, which is a exponential moving average set to 60, because we are on a 1 minute chart. If it's set to 60, that will give you the 1 hour average. So once you have that on your cumulative delta, it will look something like this. It looks like a moving average on the cumulative delta chart. And that is all you need for this setup. So now that we have the tools, let's go over what the actual setup is. So first thing we look for the VWAP trap is we typically want to see a strong impulse up out the gate on the cash session. So cash session opened up down here, and then out the gate we had a really strong push up, and we were pretty far away from both of our VWAPs. The next thing we want to look for is we want to see a pullback into VWAP. So we want to see that pullback back into either both of the VWAPs or the closest VWAP, which in most cases will be that cash VWAP. So on my chart, the cash VWAP is the solid line and the dotted line is the session VWAP. Okay, so out the gate, we have an impulse up. And the second thing we look for is that pullback into VWAP. Now, this is where we start paying very close attention for this setup. So then, right here where it says A, we want to see that bounce off of VWAP. It doesn't matter if it's the session VWAP, doesn't matter if it's the cash. We just want to see it bounce off of one of those VWAPs. So in this case, we are bouncing off the 9:30 open cash VWAP. The other thing we look for is during this bounce off of VWAP, what is delta doing? Is delta following price very aggressively, or is delta a little slow to follow? So in this case, we can see price is jumping very rapidly, but look at delta here. Delta is very slow to follow. Now, as we start to push up on price, is the delta below the 1 hour average? You see how price is well above VWAP here, but the delta is well below that 1 hour moving average. So as you can see in example 2 here, we are hitting that 1 hour delta average as resistance, but we are clearly trading above VWAP on our price. This is where that trap comes in. This move, as we are pushing away from VWAP, but we are still below the 1 hour delta, that is the trap. The buyers are being sucked into a trade that is not actually a very bullish move. It looks bullish, but that's why they're being trapped. It is not bullish. Okay, so the trigger for this trade is right here on example 2, when we start to hit that 1 hour delta moving average and start to roll off of that average. Notice how it kind of consolidates and then it starts to fail that moving average. That is the trigger for this trade. So we can see price starts to roll over as we hit that delta average. So at any point here, you can look for a sell. So most traps are going to have a cupping pattern where you start to push, but then you kind of slowly put in a cupping top, and then it typically forms kind of bottoms. Let's say there's some candles in here. They'll typically form relatively the same low, and then once we break those lows, that is a really good entry point for that short. So in this case, we can see that cupping formation. They're putting in equal lows right there. So on this break candle right there, that is typically a pretty good entry. Now, the stop loss for this trapping play would be above that cupping formation. So if there's some strong levels just above that, you could put it above those levels as well. But typically on these trades, you don't want to give it too much room on that stop loss. Typically what we like to say is, let's say if we're going to get 10 points on the way back down to VWAP, we don't want our stop to be more than 5 points. So typically around a 1.5 to a 2.0 risk to reward. Okay, so let's go back over that one more time. We have the bounce off VWAP. We start to push up. Delta is trading below the 1 hour average. Then we have that cupping formation on price. We break the cupping formation's low. That will be our entry. And then we'll put our stop loss above the cupping formation's high. And our target is going to be both of the VWAPs. We are going to target the cash VWAP and the session VWAP. If they are too close and you think you can get more out of this trade, then you can target previous value levels, or you can target the lows from that impulse that started that move up in the morning. So typically there will be some resting lows around the open that started that push up in the morning. You can look for a break of those resting lows as a trailing target. So like if you want to leave a trail for this, that is where you would want to target. Okay, so that is the first example of a VWAP trap where you are impulsing away from VWAP, you're pushing down to VWAP, and you're bouncing off of it, and then you have the trap. There is a second form of this VWAP trap. Let's go over that one right now. Okay, so starting from B here, this is going to be the start of the second formation of a VWAP trap. So sometimes you won't bounce off VWAP. Sometimes the sell pressure will be too strong to actually get that bounce off of the cash or the session VWAP. So what we look for in this instance of a trap is we want to see a failure that goes through VWAP, but then on the bounce, then we start to fail VWAP as resistance. Okay, so the impulse down should break VWAP pretty easily, but then on the bounce, it should resist VWAP on the way back up. Now for the delta, the same thing that we looked for on the first example, we are going to look for on the second example. We want to see delta trading below that 1 hour moving average. In this case, we use an EMA. So we want to see it trading below that 1 hour EMA. So in example 4 here, we can see that the delta is pulling back to retest that 1 hour delta average, and it fails it almost right away. Right as it tests it, it starts to fail. So that is your trigger to get into this trap. When price is pulling back into VWAP, you should be right around VWAP when it starts to hit the 1 hour delta average. And then once you start to see that sell pressure come in as you're hitting that delta average, you want to take that short. So in this case, we can't target VWAP because we're actually using VWAP as our entry point. So for our targets, we want to go back to what we were talking about in the first example. Typically, you will have some resting lows below VWAP. Those are the main levels you want to be targeting when you take this trap. So on the trap, let's say we entered here. We're going to enter around D. Our stop loss is going to be above VWAP. If we have any previous resistance just above VWAP, we can put it above those levels as well. But as long as it's relatively a few points above VWAP, you should be fairly safe. Okay, so our entry is on the failure of VWAP, stop loss above VWAP, and then we want to target these resting lows. If you don't have any obvious resting lows, you can just target previous value levels as we discuss in our volume profile series. Another place that you want to be looking for is when we take this trap. So let's say we took an entry on this level right here. Typically, there's going to be a bounce right before that entry. So that bounce area, wherever we found support, you have to be very careful, because what will happen sometimes is, let's extend this here. So let's say we have VWAP here. We fail VWAP, we create that support, and then we start to fail VWAP again, right? We break through VWAP, bounce into it, and then we fail VWAP again. This area right here, that support area, sometimes can create a double bottom. So you have to be careful there. You might run into a double bottom and have to cut your trade early, which shouldn't be that big of a deal, but you should have some profit if you do go for that double bottom. But just be careful. Sometimes you'll put in that double bottom and it will kill that trade. Okay, so that is the VWAP trap setup. Let me just quickly do one more example so you guys understand what this trade is. So you start off the day, you break away from VWAP, you have that strong impulse right out of the gate, you pull back into VWAP, you find support on VWAP, and then this is the trap. The bounce off of VWAP looks strong on price, but it is not strong on delta. We're trading below the 1 hour delta average. We take that short, we trade it back into VWAP, and we make our profit. Second example, impulse through VWAP, bounce back into VWAP, still showing weakness below the delta moving average. The buyers think they are strong, but they are not. They are being trapped. And that's where we make money. The buyers are getting out on the way down, which could end up pushing that much lower. But all right, guys, that has been the VWAP trap setup. This can be used on pretty much any index. We like to trade it on ES, and we like to trade it on oil occasionally, but mostly on ES. If you guys enjoyed this video, hit that like button. If you guys have any questions about this setup, put it in the comments below, and I'll get to it as soon as possible. All right, guys. I'll see you guys in the next one. Peace out.